Hi, everybody. Scott Riley, the Market Update Desk. It is January 6th, 2026. The Market Update Desk, NMLS number 157524. Let's look at what's going on today. We've got some interesting things. Obviously, we've got the geopolitical aspects going on with Venezuela. We thought we'd see a little bit more flight to safety from equities to bonds than what we are seeing. So it's a little bit of a surprise. When we look at that market. Now, piece of information we got today was apartment lists released their December rental report. Now, that showed that price changes on new rents in December fell 0.8%, which is the fifth straight month of deceleration. Year over year, rents are now down 1.3%. That is much better than the November report that showed 1.1%. Now, they've been declining on a year over year basis for about 2.5 years now. This is causing the consistent move lower in rents, is also being assisted by vacancy rates. In today's report, they reached an all-time high of 7.3% vacancy rates since they've been tracking this metric. Additionally, the average time on market for open units increased from 36 to 38.7 days. Doesn't sound like a lot, but it's also a new peak. Rents in owner's equivalent rent make up the largest section for the CPI and PCE inflation reports. Now, while there's not an immediate correlation to month over month decreases in rent, it takes time to filter through. We've talked about the deceleration of rents for, like I said, about 2.5 years now. We're finally starting to see that owner's equivalent rent take a positive effect on lowering inflation in the PCE and CPI reports. And as long as we keep seeing these month over month declines and year over year declines, that is going to continue to assist us in the overall inflation numbers. And when we get help in the inflation numbers going down, we get mortgage rates that also follow that trend line. So that's positive news. Now, we also got the ISM Manufacturing Index for December that was released yesterday. Gave bonds a little bit of a boost. The overall ISM Manufacturing Index came in at 47.9. That definitely was cooler than the estimates of 48.4. And it is, unfortunately, the low reading for 2025. Now, generally, any reading below 50 indicates contraction within the report. Looking at specific sectors, only 2 sectors expanded while 15 sectors contracted. In fact, only 11% of industries are in expansion mode. That's the second smallest amount since 2009. New orders in the employment component section remained weak and well within contraction. Also, within the report, we saw prices, which are still above 50, remain stable, which was better than expected in the report. So that was a positive from that. So while we're just not seeing a lot of expansion within the manufacturing, and that's something that the markets are definitely following very closely. Now, this week, we are getting the jobs numbers. So starting tomorrow, we're going to get the ADP employment report along with the JOLTS report. Thursday, we get unemployment claims. And then Friday's the 900-pound gorilla of the week, which is the BLS non-farms payroll report. What we get from that is always a crapshoot because within that report, there's so many variables and imputed numbers within the birth-death model. It's always a little bit of a guessing game. On the technical side, we're seeing mortgage bonds test overhead resistance at 99.88 at the end of yesterday. Now we're moving down from that a little bit today. So we're really trading in the range of a dual support level of the 25 and 50-day moving averages. Right now we're about 13 basis points beneath the present levels. The 10-year treasury, boy, we keep bouncing around on this between 2 levels of resistance. We're seeing the overhead at 4.21 and bottom resistance of 4.14. We're stuck in that range. Now it'll be interesting to watch as we go through this week with the employment numbers, which we are expecting are going to be weak. Will we finally somehow break downward beneath that 4.0 level and hold? If we do, then definitely look for better mortgage rates. We'll keep you updated with data that comes out tomorrow. We're seeing a lot of activity. It's snow and cold outside. If you haven't looked out your window, it's the best time of the year to buy because there's not as much competition right now as what you're going to see probably come end of February, beginning March, when we see a wave of buyers come on the market for spring. More buyers means more competition, means more challenging times to get offers accepted. Give us a call. We'll talk about loan programs, see what we can put together for you, and give you the information so that you can make an informed choice. 616-293-2189. The Market Update Desk. Get your original singular market news source for West Michigan. Take care.